Good morning, everybody, and welcome to the DecisionPoint Trading Room. We are here to give you all the information we have as you head into this trading week. We have some new indicators to introduce to you today. But before we get started, a couple of housekeeping issues. First of all, we are not registered investment advisors, so all trading decisions are your own. Anything you hear in this trading room or read in our blog should not be considered a call to action. We also have the Q&A box that is for you to ask your questions and give us your symbol requests. The chat room is for you guys to get in there and meet each other. Just make sure that when you're in there that you use the drop-down menu to send it to everyone. Fred is in there. He is our official moderator in the chat room. So go say hello to him and we'll get the conversation started. All right, Dad, I think that's all the housekeeping I have. Again, my dad, Carl Swenlin, here he is. I'm going to introduce him right now.
Okay. One of the things that I like to hit on once in a while is that DecisionPoint Alert publication is intended to help the subscribers to determine the trend and condition of the market, trending up, down, sideways, and is it overbought or oversold or neutral. And this is a basic starting point for making any decisions on trading or investing. You need to know what direction the market's going and what condition it's in. We'll touch on that a little later. A news item that came up last week is the CPI calculation is going to be changing pretty quickly here. And this is a fundamental issue, but let's face it, the CPI is a big issue right now, big fundamental issue when we're looking so hard at inflation. And what the basic change is they're called the spending weight calculation is going from a 2-year span to a 1-year span. What basically, the way I understand it, I'm not going to get in the weeds, but the way I understand it, you're basically looking at a rate of change. And if you're looking at a rate of change for inflation, if you go back 2 years, it's a lot more than if you go back 1 year. Right now. Now, down the road, that will change. Guaranteed that will change somewhere in the future. And then these yahoos will change the calculations. So we aren't going to be able to figure out what's going on, which is the basic intention of that. If you can't meet the minimums, change the minimum.
Exactly.
Okay, let's get on. We get some big news this week. We've added 4 new sectors to our
industry groups
in our Silver Cross and Golden Cross calculations. Let's just see there. I got to get my pointer started. We've added, I'll go for the four of this. Biotechnology is the first one you're looking at right here. The Silver Cross Index is a percentage of stocks in a given index that have the 20 EMA above the 50 EMA. That's basically a Silver Cross buy signal, we call it. And the Golden Cross Index is the percentage of stocks in that index with the 50 EMA above the 200 EMA, which has been known as the Golden Cross for as long as I've been around. And the opposite of the Silver Cross is a dark cross, and the opposite of the Golden Cross is a death cross. Isn't that dramatic? Not. You can't blame that on me, although no. I love it. I do love it. Okay, so we have a set of charts that have all the gold, silver cross indexes shown. And a part of that chart, part of the calculation is the percentage of stocks above their 20 EMA, 50 EMA, and 200 EMA. Now, right now you see biotech is Golden Cross is rising, and that's a good thing. It's not what we would call in bull market territory, but the Silver Cross certainly is. When it's above 50%, we consider that it's in a bull market condition. And looking at the percent of stocks above the 20 EMA, there's 70% above the 20, 69% above the 50. So what that tells us is prices above the 50 and the 20, about 10 points more than what we're showing on the Silver Cross Index. So we can anticipate, and not guaranteed, but anticipate that the Silver Cross will improve by about 10 points, up to about 70%. And the same goes for the Golden Cross, which is at 38%. Let me get this something out of the way here. Okay. Here we have the 50, above the 50 is 69%, but only 47, let's say 48% above the 200. So that would give us, maybe another 10, 12 points higher on the Golden Cross Index. So right now it's looking bullish. Now, let me just switch over to another chart briefly. Remember a few meetings ago, I discussed the fact that we had lows on the sectors and indexes in bear market lows in basically September, October period. And then we had the December low, which was a higher low. And basically we are here. Well, this just went to a rising trend. I've got this signal circled to show that the 50 is going to go above the 200. So that's going to be a Golden Cross buy signal on this. But what I want to get back to this lower low and the lowest low in September, October, and go back to when I set these charts up this weekend. You notice we have the lowest low of the bear market in June for the biotechnology, and also actually the bull market high was in September, whereas the major indexes had their major high at the very end of December. So this is really a powerful tool, noticing that when you see these higher lows, you have a major low and then you see a higher low and the prices move higher. So this particular index, let me see what we got. It's risen 31%. So it is in a bull market, biotechnology. Okay, let's go on to the next one we got, regional banking, and I title it Banking Regional so that it alphabetically falls in a rational place on the list. So this is regional banking ETF spider, and I'm not going to go in detail on all these, but notice we have much less good news on that. Also did get the low of the bear market in the June-July period last year, and but we really don't have we have a double bottom here, so that's not looking so great. Moving on to the next, semiconductors. Notice we don't have data in this 1 year period here. We basically, when we calculate them, we go back, well, it looks like they went back about 2 years on these, and basically, if you try to back calculate, it gets a little fuzzy because the members of the index change over time, and fewer of the ones that are currently in there will be in there back here in 2020. So, okay, semiconductors looking spectacular, Silver Cross at 100%. And semiconductors matched our major indexes by hitting their bear market low in October, and we do have a higher high, so that we definitely have an established rising trend on that sector, and it's up 41%. Pretty great.
Yeah, looking good. Reverse head and shoulders.
Right, and look at all these above the 20, 50, and 200. They're way up in the top of their range, so they can stick up there. So it's not like it's likely to be over, although we have hit the top of the range for the Silver Cross Index, and that could be doing another pullback soon. And then we have retail. I got that in the wrong order. I'll have to fix that. XRT, and that again is sort of matching the major indexes, and notice that it's not doing that well. It's up 25%, which ain't too shabby really, but it's not doing as well as the other ones are. So I better move on here, or cover what I need to cover. Okay.
What's interesting, seeing those group charts as you get set up for the other part of this discussion on the market. One of the interesting things, Biotechs in particular, is seeing the underneath action going on, because I've been watching Biotechs closely when I do DecisionPoint diamonds. I get a lot of Biotechs that come up in my diamond scans. And one of the things I use is relative strength. And relative strength for the Biotechs has been going down. You would never know it when you look at the internals here. It actually is internally strong. And I've been kind of, sweeping those Biotechs under the carpet because I've been watching relative strength. And relative strength really hasn't been telling the story for Biotech. So I think these new indicators are really going to make a difference in not only my own, in the way I look at these sectors, industry groups, but I think it'll also give you a much better understanding of what's going on inside of them as well.
Right. Let me just show that list briefly.
So the list you're going to see here is our Golden and Silver Cross Index chart list. This is available to all of our subscribers, and we will be updating those new, the new ones should go in later this afternoon when the market closes. So you'll have access to all of those new Golden and Silver Cross indexes. If you're interested in a DecisionPoint.com subscription, of course, you can go to our website, and you will, regardless of what subscription you get, will have access to this chart list.
Okay, I did update them on Sunday, so the charts are available now on the website.
Oh, well, perfect.
Okie doke.
Go have fun, subscribers.
So back to the market. Today, the futures were down before the market opened. There was improvement. Actually, the market was up for a while, but finally settled back into what we would expect. You notice that we had this rising wedge on Friday. It broke out of that wedge formation, but ended up closing inside it. So that in itself was a signal that we were probably going to see a down day today. The rising wedges most of the time will resolve downward. So that's what we're looking for on this. Friday volume was very heavy on the S&P total S&P 500 total volume. So that was above the 1-year average. New highs and new lows chart for the S&P 500 on Friday. It was we noted that there was a declining a decline in the new highs, while the market was making higher highs that week. So that is another sign that we're going to have some weakness this week. The next today, tomorrow, and half of Wednesday are going to be probably not very interesting because of the Fed meeting on Tuesday and then the announcement on Wednesday at about 11 o'clock Eastern. Am I right about that? No,
Yep.
It's about just 2 p.m. Eastern.
Yes.
9 o'clock our time out here on the West Coast. All right. We have our short-term indicators. S&P, the Swenlin trading oscillator for breadth and volume. Again, they have a negative divergence with lower highs against higher price highs. And the stocks above the 20 EMA and PMOs rising, also negative divergence. So that tells me that we should have a pullback in here. It could be within limits of this rising trend, coming back to the rising trend line, which would not be terrible for the bulls. Okay, and now the intermediate term indicators. We have the intermediate term breadth momentum and volume momentum indicators. And again, they are, well, let's see, breadth is negative divergence. Volume is holding up, so it's equal. But again, negative breadth, and again, this is percent of PMO crossover buy signals. That's when the PMO crosses up above its signal line. So 63% on buy signals in that regard, and again, a negative divergence across there. The dollar running flat, but in a longer term declining trend. This is benefiting gold. Gold is up about 20% from the November low, and this would put it into a new bull market. Crude oil, expressed by the ETF USO, it had a nice advance here, a flag formation, which should have resolved upward, but it didn't. It resolved downward and continuing down. Flag formations are the best, they're the most bullish if you get the pole going up and then they back off. They pull back some, so you have a declining trend across the flag. That's the best. It's like more compression building up, and if you see them going rising flags instead, that's the weakest and is more likely to resolve downward.
Yeah, this one's sort of straight across, so
Right.
middle of the road.
20-year Treasury bonds, longer term, it's on a downtrend, but since last year, it's been in a rising trend. Right now, it's, I would say, continuation pattern, which would mean it's going to track a little higher. Let me look at the 1-year chart. Okay. You can see quite a severe decline, and it's rallying now for we don't know how long. Bitcoin has rallied off. If it's low, it's up. Gosh, let me check that. About 54, 55%. Pretty good. longer term, a slight dent in this terrible decline. So it's got a lot of resistance to get through. The 10-year Treasury is rallying again off of this low in the very short term. My expectation is that interest rates are going to continue higher. One of the things you notice today, the Dow is not nearly as far down as a percentage as the S&P 500, and that can be attributed to problems in the big tech sector. I'm going to skip the rest of those for today. So I do believe it's time for me to turn it over to you, Erin.
Oh, my goodness. Okay. Let's do it. If I can get the right one here. All right. You should be seeing all the sectors. Okay. So this is this is my list on the chart style, a DecisionPoint chart style for candle glance. If you want to have your own candle glance style that doesn't look like one of these, if you want your own candle glance or custom style, just set it up on your, set the chart up the way you want it to on your workbench, and then save the chart style as candle glance. And then you'll see your own candle glance style. If you want the DecisionPoint one, no problem. Send an email to support@decisionpoint.com and I'll get you our custom chart style that you can use for your candle glance. But what we want to look at when we see all of these sectors on the same page is we're looking for new momentum. We're looking for momentum that is rising, like you can see with comm services. And then we want to know where the weakness is, because that'll give us a little bit of a better sense of what's going on in the market. When the market is seeing a lot of action in comm services, in technology, in consumer discretionary, when you see those rising PMOs, and they've been rising for so long, that tells you that investors are interested in those more aggressive areas of the market. And when they are interested in growth and aggressive sectors, that's usually good for the market. And you're going to see the market move higher, because these three sectors a lot of time do lead the market up and lead the market down. When we look at the more defensive sectors, utilities being one, you can see that its PMO is kind of in decline here. Consumer staples, also PMO in decline, and healthcare, PMO in decline. These are some of the most defensive areas of the market, and they are getting hit very hard. And so it really does prove the point. We're in this bull market move, or this, I should say, bear market rally. Might be the start of a new bull market here. We'll have to see. But you know that the interest and the aggressive growth sectors are leading the market higher. That's what this is telling us. Then there are those kind of middle of the road sectors, and they honestly are looking a little bit middle of the road. Industrials, there is no momentum moving higher. So we have this sort of a consolidation pattern sideways. You can see energy is still rising, but the PMO is flattening just a bit here. That is because we're having a pretty steady rising trend. That's part of the reason for that. But 96.2% as far as the StockCharts technical rank. So there is still a lot of strength under the surface for energy, even though we're kind of seeing a slowdown here on rising momentum. Materials, which had really, are led a lot of times by gold and silver, you can see that materials are starting to turn over just a bit here on the rising momentum. So that's not a good sign. And it tells me that gold might be having a little bit of a problem moving forward. And healthcare, I said already, we are losing momentum there. What didn't I cover? I think financials, which are seeing a breakout, a tiny little one moving higher. So we'll look under the surface for financials for certain. And real estate really making a nice move, gotten above they have gotten above the 200-day EMA and have set a pretty nice rising trend here. So real estate is going to be an interesting sector to look at under the surface as well. Let's go to financials though. So my dad showed you the Silver Cross, Golden Cross, and percent of stocks above their 20, 50, and 200 for those new industry groups that we have. This is for the financial sector, and it gives us a really good idea of what's going on under the surface. And you can see that the PMO is rising like we already knew. And Silver Cross Index is at a nice, healthy 83.5.6%. And the Golden Cross is at a fair 61%. Both are rising pretty much. You're seeing a little bit of a flattening out here. We'll have to see what it looks like after the close. But stochastics above 80. Notice that relative strength line is starting to improve as well. And percent of stocks above their 20 and 50, pretty healthy here. But notice that the percentages are very close to the Silver Cross Index. So what this tells you is that if we only have about 88% above their 50 and the same amount above their 20 as we do Silver Crosses, we're probably not going to see any more Silver Crosses because we need more stocks above their 20-day EMA in order to change this number. So it's going to be extraordinarily difficult right now for financials to continue the run that they're on, in my opinion. Real estate, where we're seeing a lot of new momentum here. You can see the nice breakout from the bear market trend that it was in. We've got stochastics above 80, and notice that relative strength is really starting to improve for this sector. I would say this might be an interesting sector to watch moving forward and into this week. All right, we are at 9:30, and I do want to make sure we have plenty of time for our symbols. So I'm going to run over here to our industry group summary, and we'll look within the real estate sector because that looked pretty interesting to me. So you can go to the industry summary, and there are a couple of ways to view it there. You can go just in a table, but I like the chart view because then I can see what's actually going on. If you save your chart style as industry summary, then you can have this chart look the way you want it. And so I have mine set up for a DecisionPoint look. But we're going to go down to real estate right now because I like the look of what's going on in there. And we can click through and just look at the different industry groups to see really where is the strength, what is really leading this particular sector higher. So diversified REITs trying to break out here, but have fallen back below this overhead resistance. Real estate holding looking good, very steady rise. So that looks like a sector that I might, or an industry group I might be interested in finding stocks in. If you click here, that is going to give you all of the stocks within that particular group as sorted by StockCharts data vendors. And you can see you sort it by StockCharts technical rank, and then you're going to get all of the really strong ones at the top. And you can see how most of these are breaking out or making some really nice moves to the upside. I have to say Howard Hughes Corporation, HHC, just caught my eye. It is having kind of a big decline today, but it's not really changing anything, even the breakout that it had on Friday. So liking the look here of HHC. So that's one way you can just really dive in and figure out what industry group you like, how you can find some stocks within that group. And you've already set yourself up well, because as we often say, half of a stock's price movement is attributed to its sector and its industry group. So you really want to find those sectors and industry groups where you're seeing that nice momentum moving to the upside. And then you can go in and find those stocks using this industry summary. I'm finding it to be extraordinarily helpful when I do my DecisionPoint Diamonds picks. Let's see, hotels and REITs I didn't like. Industrial office looking very interesting with there's that breakout above the 200. Plenty of upside before it hits overhead resistance here. So that looks like a pretty good sector. If we dive in there, organized by scooter, hover over the symbol, we can look and see where we might want to look. Plymouth looks interesting because you can see it's just now had its breakout here, very similar to the group itself. And it is holding above that prior resistance level. PMO rising, stochastics oscillating above 80, and relative strength looking all right. It could be better against the group, but overall it's doing very well against the SPY. So that's very important. And Plymouth Industrial looks very interesting right now. Kind of a low volume stock, but something you can consider there. And back here, let's go to mortgage REITs. Not above their 200. They do have a nice rising trend, but the PMO is overbought and it really is hitting overhead resistance. So not a fan there. Nice breakout for retail REITs, but we do still have strong resistance here at that prior top in August. Residential REITs moving mostly sideways, very uninteresting. Specialty REITs getting stuck below their 200-day EMA. So that's the best way you can take that deep dive into a sector and its industry groups and find those stocks that you like within. All right, so let's go ahead and move into your symbol requests. What we're going to do is look at the daily charts. If I find something particularly interesting, we'll go ahead and look at a 5-minute candlestick chart, and that will help us determine entries and exits. So what's our first one, or did we have any questions that we needed to answer, Dad?
No, I think we can go ahead with the symbols. HSY will be the first.
Hershey. All right. Well, in a declining trend, so just out the gate, that kind of worries me as far as price movement goes, but we did get a move above the 200. The RSI is rising, but it is still negative. PMO is just turned up. Stochastics are still in negative territory, but are rising, just not as strongly as I would like on a reversal, which is what I could see we're looking for here. And it's one of the best in its group, food products, but notice what's going on with food products. We're really seeing a decrease in relative strength. And you can see that Hershey itself hasn't been doing that well against the market either. It is making a little bit of a reversal here in relative strength. It looks like it's breaking out of its relative declining trend here. But this is a little early for me as far as going for a reversal. But that is really my...
How about a weekly chart on that?
Yeah, because that's my analysis style. And I would need to see that breakout from that declining trend. And yeah, not the best looking weekly chart either. Kind of gives the look of maybe a rounded top developing here. So if you're going for the reversal play here, I think it's really early and I would be very careful with that. If you own it, certainly I think you would want to hold it and maybe think about setting that stop tightly up close to the 200-day EMA, right about in there, 218, 217, I'm guessing, would look pretty good.
Okay, XOM, Exxon.
All right. Okay. I noticed we had a bunch of these kind of crazy looking candlesticks. I've kind of been ignoring them as far as rising trends go. It did break that trend, but currently we're still in the rising trend. We had the breakout and now we're pulling back to the breakout point, which is kind of a textbook price action that you would look for. PMO is topping, but we did see that before, and it's not overbought, but okay, so the PMO is pointed downward. So just to clarify, I don't get involved in any stock where the PMO is pointed downward. I just don't. If the momentum is pointed downward, my chances of the price moving downward is much higher. So I just prefer not to get involved at that point. So I don't know that I would be getting involved in it right now. I certainly see a hold here because the rising trend hasn't been broken. But you can see right here, it did pull back to the breakout point on Friday, and it is falling a little bit below that. Let's see, what else can we see? Stochastic's still okay. One of these that I do see is a hold. I would not be a buyer just mainly because of that PMO pointed downward. And a weekly chart real quickly. PMO is pointed downward here as well. Scooter is still in what I call the hot zone above 70%. I say it's a hot zone because with the StockCharts technical rank, it tells you how this stock ranks amongst its brethren, its universe, and in this case, all of the large caps. So if you have a stock that is above 70%, that tells you that it is in almost the top third of all of its universe. So you want to see those StockCharts technical ranks above 70. It's also like the PMO rising. It gives you a better chance at success.
So it's definitely a hold. Okay, The next one is XOP, and we have a question with that. Would you call current pattern as head and shoulders in formation? XOP did have this descending wedge a few weeks ago, which is bullish. Yeah, descending wedge is bullish if we can locate it.
Right there. Let me get to the annotate. We're going to have to go to the weekly chart to look for something like a.
Yeah, that was a descending wedge there.
It's a little messy, but you get the idea. Whoops, there we are. So there's the bottom one right there. So yeah, we had the descending wedge. We got the breakout as expected. Looks like we have a silver cross in the making right now. Head and shoulders. So I would have to go to a weekly chart to discuss that because I don't see one right here because I think I know what you're looking for. So head and shoulders are topping patterns. And so they need to come off of a rising trend, which kind of technically they are here. That would be your left shoulder, your head, and a right shoulder building. But honestly, when I see this, because of this rising trend line, I really don't look at this as a head and shoulders because that would be the neckline right here between this and this. And that's such a steep rising trend. It kind of matches with this one. I would be looking at this as more of maybe a symmetrical triangle here. You can see right there. Maybe a sort of a messy triple top, but I think that's, I would look at this more as a symmetrical triangle, and that's a continuation pattern. The prior trend to this particular pattern would be up. So the expectation would be an upside breakout here. And the silver cross makes this it looks pretty good. Not the best chart, but looking okay.
VERX.
All right. Nice rounded bottom. That caught my eye right as soon as this chart developed.
If it's a long candidate.
Okay. I love the rounded bottom. I love the new PMO crossover buy. Stochastics now above 80. And you can see, particularly in the thumbnail, the increase in relative strength for this stock right now within its group. I like the look of this. We've got overhead resistance coming in right about there. So we do have a little bit of a risk of hitting this level of overhead resistance right in here. That would be in about 5 to 6%. So you've got some pretty decent upside potential. I mean, I think this could be considered a buy candidate. Let's look at the weekly really quickly. The weekly is telling me it would be a short-term investment, mainly because we've got the big declining trend that hasn't been broken and the weekly PMO is falling. But if you were interested in this, let me get to a 5-minute candle very quickly. So this is where we determine our entries and our exits. So what we want to do on a 5-minute candle is look for the 5-minute PMO to give us a crossover and have that in conjunction with a positive RSI. When those conditions are met, that is a conservative buy point. And you can see if you'd taken that conservative buy point here, that would have put you in right about there, even before the breakout, and obviously lower than what our price is now. And right now we don't have a buy point because the PMO is not turned up. And so if I came to this chart right now, I would be getting excited because the PMO, even though it is down, the RSI is positive. And the minute that PMO were to turn up, if I got a breakout, I would probably be making that my entry. If you want to go in more conservatively, you wait for it to turn back up and give you the crossover. If you want to sell a stock and you come to a 5-minute chart, all you're really looking for is negative momentum. So when the momentum tops, that's your exit point. So right here, the momentum topped, right in here. You can see momentum topped, and we got the crossover sell right in here for the exit. All right, next up.
Not too long ago, it was with that last candle, it was high enough, it may have turned the PMO up, but that didn't last long.
No, there we go. You can see it is decelerating, but this new candlestick is really posing a problem for it. Next up.
Next one. Okay, TSCO.
Right. Consumer discretionary. Well, it had a failed breakout on a bearish filled black candlestick. That tells me this is a reversal candidate. The PMO did give us the crossover, and the RSI is positive, so I'm not going to, ding it too hard for what's going on with price, but price is primary, and that is topping formation right there. 3 candles that are very negative. So that tells me that even though we have some of these things under the surface developing, price is weak right now, in spite of what we're seeing with these indicators. So that could be a problem, but this could also be a bull flag forming. So what's a person to do? Well, I would go and look back at my PMO, which we were just talking about on a crossover buy, stochastics positive. So I would look at this chart and kind of be middle of the road. Like I could see, making the move off of this possible bull flag, but I also worry about the price weakness because it's coming on a breakout here. A flag doesn't necessarily have to, be at resistance or support. And this one is just still looking very weak. So I'd be careful with this one. I certainly see it as a hold, but I would want to tighten my stop just because of the way that price weakness is showing up. And particularly if I was able to have gotten in back here or down here, I'd probably be looking to shave that position personally.
Tesla.
All right. Definitely in the news on its new bull market run. And I say that because if you go from the low to pretty much where it's at right now, that's a 63% gain right now for Tesla. So looking pretty exciting. Did get above this area of overhead resistance, kind of a nice round bottom on here, although it does look like it's starting to get a little parabolic on us. You can see that right here. The rising trends are getting steeper and steeper, and that is a recipe for a decline. The indicators still look really strong though right now. And so we had that breakout. It looks like it's pulling back to the breakout point. Very volatile though. It's a pretty big decline today. I don't see this as a sell. I think on the pullback to the 50, if we get a return, a bounce off that 50, I think this could be an interesting entry on Tesla. But we need to be careful. We were looking at all of those charts that Carl covered, and we're seeing all of these negative divergences. We're starting to see some weakness. And this is one of those high aggressive growth type stocks. And they're the ones that tend to lead the market. The market starts to turn. And more than likely, these large caps are also getting weak under the surface and getting ready to turn. I'm not saying you couldn't be a buyer here. Your next level of overhead resistance is still about 15% away. So not a bad entry on a pullback, I would say would be even better. If we go to the 5-minute chart, the entry hasn't quite occurred, but it's about to. You can see that the RSI is staying in negative territory, but we do have the PMO on a buy signal and it is rising. So if you were a little on the more less risk averse, you could maybe jump in on this one earlier. But looking at the price moving sideways, I think I would want to wait for that RSI to start getting more positive, just so that I know that a breakout is more likely to occur. The PMO is telling us the breakout's more than likely going to occur. But the RSI is saying, well, price is kind of topping out a little bit here, so it might move lower. I'm looking for the best entry in on a volatile day where we're looking at 2.9% down. There's a lot of money to be made here if you can get the right entry. And I don't think we're quite at the right entry for the best entry, but you could certainly make a case to get in now because the PMO is rising.
SMCI.
All righty. Technology, Supermicro, big rounded top. So right off the bat, I'm seeing price as being weak on this one. RSI is confirming that it's negative. PMO is confirming that it's actually topped beneath the signal line for the third time, maybe third time's a charm here, and we're going to see it move even lower. But the acceleration to the downside on this, notice the relative strength. You've got a group that's actually performing well, and this one is not. It's underperforming its group. It's underperforming the S&P. Maybe on the short side here, this does not look like a buy candidate. And honestly, if I own this, I would be looking for any excuse to be getting rid of it right now.
Okay. NOC.
Northrop. All right. Well, it's bouncing off very strong support here, looking very interesting. Certainly, I don't like a filled black candlestick. That is a bearish candlestick formation. Not liking relative strength here. The group is starting to perform in line with the S&P. Notice that stochastics have turned down in this negative area below net neutral 50. OBV headed lower. I can see why you're looking at this as a reversal candidate off this strong support, but I don't know that the weakness is over yet based on what I'm seeing under the surface here. So I would be very careful on this one if you're going in for a reversal. If we look at the DP weekly, yeah, this is a really strong area for a reversal. So again, I get it. But the price doesn't look healthy enough to get in right now on this reversal. I get it, but I need to see more proof underneath that we're going to get that price rise off of these lows. And I just don't see anything to tell me that that's going to happen. Because it's a strong area of
you need the PMO to turn up at the very least.
Exactly. And, like I said, it may hit strong support, but that doesn't mean that it's going to hold it. Because look down here, there's even stronger support lined up at this top, these tops, and this low. So I think it's still vulnerable for more downside. And as Carl said, the PMO is pointed downward. So sorry, don't like it.
HUM.
Humana. Okay. This one is on some support, but it's more near-term support at this low because I see the support level really being just a bit lower than that. PMO is bottoming above its signal line, which is a positive, but RSI is negative. And again, this relative strength is kind of blah. Stochastics are in decline. The stochastics, the reason I include them on my chart is they tend to not lag. They tend to be pretty good early warning signals, and we'll jump in there before the PMO sometimes. You can see back here, stochastics were topping, and it was before the PMO. The PMO was actually rising at the time, but stochastics were saying, hey, there's some problems under the surface, and we did end up getting a bit of a decline there. So I'm not liking what's going on with stochastics. It's suggesting a breakdown here. And I would say that the support level it would go to is right about there. That is a decline of about 4.5%. So I could see maybe if you want to get in here and take a chance, but I just don't like those stochastics moving downward like that. It's almost as bad as if the PMO were turned down. And then you've got the negative RSI.
The healthcare sector doesn't look great either.
No, and you can see healthcare providers also underperforming. So I think you could do better.
XLE.
All right. Well, if we're going to look at that, we'll do that on our sector chart. All right. So it has hit overhead resistance, and if it continues lower, that's going to be a giant double top. PMO has turned downward. RSI is still positive, and under the surface, we still have a lot of nice participation. And I don't know, Dad, I'm not seeing a breakdown in the participation that would tell me to look for a big decline, but I don't like that PMO turning over.
Right.
So we do have we do have some internal strength under the surface, but we need to watch it very closely. And, now that we have that vehicle to play XLE to the downside, ERY, we'll have to pay attention to that because this could form a double top. I think we're vulnerable to downside down to this support level, and that's a 7% decline. So, but then it has the opportunity to rebound. It's still pretty strong under the surface. I don't know that I would be a seller here, but maybe tighten up that stop to between this support level and where price is now. That might be a safe way to play this right now.
Valero Energy, VLO.
Yep, I got it. So a lot of energy stocks here, and they are starting to show the decline in momentum. So we do need to watch this really closely. We're starting to see a breakdown in relative strength here. Pretty much the same, though, right now for the group. It was definitely due for a big pullback after this long rise. Look at that giant filled black candle. These usually do occur at tops, and certainly that's exactly what happened here. The pullback would have been kind of a good thing to see, but it pulled back too far. It's pulling back below those support levels. I know if I own this, I would be very nervous right now. I would probably tighten up my stop just because we're seeing a little bit of weakness here in crude oil in particular. But honestly, you could even make a case for a cup with a handle developing here. So I don't know that I'd be immediately looking to sell this one. I don't think that I would want to enter, though. That is a certainty.
The sector is looking iffy too, remember?
Exactly.
Okay, we have a Canadian stock here, BOS.TO.
All right.
It's up 6% since buying, looking for a stop suggestion.
Okay, well, let's get a log scale because it's really hard to see price movement. Now I've moved to a log scale, so that means support and resistance lines work, but rising trend lines, declining tops trend lines on a log scale chart are not correct usually. So don't be doing that. Don't be playing a log scale on rising bottoms trend lines, et cetera, because they don't always line up when you get back to a arithmetic chart, which we prefer. Nice breakout. You're looking for a stop level. Let's see. So right now, let me get a better line on this. Yeah, this is going to be a tough one. So the next level of support isn't for another 10%. So I know that is kind of a deep stop to have to think about, but really that's the level that you're going to be in danger. But if you're looking for where
he's up 6% since he got in, so he's got some room.
Yeah, that's where I would be looking, because at this point there's nothing in between here to give us any kind of a help. So I see 9.4%, 9% somewhere in there is where I would be considering, because it did have the breakout. PMO looks great. Even the RSI is not overbought on this, despite that move upward. So I think this one looks rather interesting, actually. Certainly a hold, as you are correct in assuming there.
Okay, PTC, Papa Tango Charlie.
All righty.
And
Rising trends intact. but it does look like it's weakening. Look at our early warning system here for the stochastics. They are in decline. And even the PMO is starting to decelerate. That tells me we're in a top. We're getting ready to experience a decline. And that would mean possibly shaving a position to keep some of my profit. If I'm looking for a buy, this is not where I'm going to go because of the weakness I'm seeing with stochastics and the PMO. It is still rising. Relative strength isn't great enough for me to take a chance on this one.
Okay, EQT.
All right, another energy stock getting ready to hit support. And this does look like fairly strong support right now, but PMO is turned downward. So again, not a candidate for a buy. Stochastics falling. So this is not a buy candidate. And if you hold this, you are probably looking at a stop level of about 4% that I would be paying attention to. If we're lucky, we'll get a second bottom and a double bottom, but notice this sort of rounded decline that we're starting to see here, which does bother me. So I don't know that I'd be entering here. I'd probably tighten up that stop.
He wants to see Tesla, but he also wants to know Google and Amazon for earnings trades.
Well, we talked Tesla, so let's look at Amazon. I like Amazon. I've been liking Amazon. Here's the level of resistance that it did break above on Friday. You can see pulling back, but we have a silver cross. PMO is rising. As far as earnings plays go, I don't know that you're asking the right person. Maybe you should ask Tom Boley because he plays earnings. That's not my style. And one of the things that I do, I won't say recommend, but one of the things that I do is I don't hold through earnings if at all possible, because we don't know which way they're going to go. People can be fickle. You can get good earnings and the price can still go down. Earnings can be terrible and price can still go up. It's just easier not to deal with the volatility and kind of see where earnings take it. If you get a nice gap up on earnings, then more than likely it's a winner that's going to keep on winning. I don't know when the actual earnings date is. Let me just do a quick check over here. And it says that earnings are going to be in 2 days, February 2nd. So I do like Amazon. You could certainly take the chance because we did get the breakout here. But I don't know. Earnings are always a scary thing. So I don't know that I'd want to be holding. I really would just want to know what they're going to be and how the street reacts. I don't like to get in before earnings and take that chance. Sorry, I'm not very helpful there.
We got about 40 seconds.
Oh, well, then we better stop what we're doing. Thank you so much for joining us in the DecisionPoint trading room. We will be back here on Monday. We are live at 9 a.m. Pacific time. So if you want to join us live, go ahead and go to our website and you'll see right on the homepage an area where you can click and go ahead and sign up for the trading room. Of course, all of you in the room live are going, what are you telling me this for? Because on the recording, which will be posted to YouTube later this afternoon, a lot of people will get to see it. That's all I have. We will wish you good luck and good trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.